Greetings, everybody. Welcome to Liberty Call. Today is Tuesday, April 11, 2023. Hope everybody's having a fantastical day out there in the interwebs. Looking at my charts, everything seems to, or I guess the bulls were out in force today. Everyone seemed to feel much better about things. The markets did slide a little bit in the last hour. The S&P and the NASDAQ slipped back into the red, but most of the charts seem to be in the greens. I see a lot of green across most of the world, and at least until you get to Asia. Alrighty, so if it's your first time watching Liberty Call, welcome, and please give me some thumbs up, likes, shares, subscribes. I greatly appreciate it. And my boy Jake, he's sleeping back here on the floor somewhere. He'd appreciate it because then I can buy more dog toys to throw. He loves playing fetch. So, alrighty, well, let's go ahead and jump into the news of the day, or the markets. Dow Jones was up 0.29% or 98 points, closed at 33,684. S&P 500 flat, down 0.02, closed at 4108. NASDAQ down 0.43, closed at 12,031. VIX was up 0.74% today. It's currently at 1911. Canada was up 0.72. Brazil up 4.19. Let's see here. Over in Germany, they were up 0.37. UK up 0.57. France up 0.89. Netherlands up 0.46. Spain down 0.8. Italy up 1.15. Switzerland up 0.31 and Portugal up 0.29. Russian exchanges both red today. MOEX down 0.54. RTSI down 1.06. And the overnights in Asia, the Nikkei was up 1.05%. Australia up 1.26%. New Zealand down 0.06%. The Shanghai in China was down 0.05%. The Shenzhen component up 0.04%. China A50 down 0.59%. DJ Shanghai down 0.07%. And Hang Seng up 0.76%. Taiwan weighted came in up 0.24%. All right, well, so those were the markets for trading day 4/11. So not too terrible, but it really feels like we're waiting for a shoe to drop or something. I mean, what sort of bad news is next around the bend that it's going to throw everyone into a tizzy and make the markets, react erratically. Alrighty, well, let's go ahead and jump on over to today's market recap. S&P 500 advances on rising energy stocks, inflation data-eyed. So let's see get my notes here. On Tuesday, the S&P 500 rose, driven by energy stocks, although caution remained in the markets ahead of the release of the fresh inflation data on Wednesday. Investors are concerned that this data will influence the Federal Reserve's thinking on future rate hikes. Despite concerns about weaker global economic growth hurting energy demand, oil prices gained, resulting in a rise in energy stocks. The International Monetary Fund trimmed its forecast for global real GDP growth for 2023 to 2.8% and 3% for 2024. Among the biggest gainers in the energy sector were the APA Corporation, Devon Energy Corporation, and Halliburton. CarMax jumped to over 9% after reporting fourth quarter earnings that exceeded Wall Street estimates despite weakening sales and lower used car prices. On the other hand, Moderna fell more than 2% after reporting that a final stage study of its experimental influenza vaccine did not meet the criteria for early success, failing to enroll enough people infected with the flu. Yeah, I don't know who would want to take Moderna or Pfizer's fancy vaccines. I kind of like my heart working the way it is. But, hey, I'm sure there's a fool born every day. Big tech companies were mostly under pressure, with Microsoft down 2% as China and the U.S. consider whether regulatory scrutiny on generative artificial intelligence services like ChatGPT is required. Baidu and Alibaba Group Holdings Limited, which are also rolling out their AI generative services, saw their stocks lower. Financials were also on the rise, led by bank stocks ahead of the quarterly earnings season. JP Morgan, Citibank, Wells Fargo, and First Republic Bank will kick off the quarterly earnings season on Friday. So set your watches, guys. In other news, Newmont Mining Corp improved and finalized its offer of $19.5 billion for rival gold miner Newcrest Mining. The improved bid received some support from Newcrest shareholders, including top shareholder Alan Gray of Australia. Let's see. WW International jumped over 50% after Goldman Sachs upgraded the health and wellness company to buy from neutral, rating late Monday. citing the potential of international growth. The gain on Wall Street occurred just a day ahead of key inflation report, which is expected to show that price pressures remain sticky in March, potentially adding to expectations for another Fed rate hike next month. Stifel commented that, quote, following a somewhat robust March employment report, the market is anxiously awaiting tomorrow's inflation data as the key indicator of price pressures ahead of the May FOMC meeting, end quote. My nose is all stuffy. Let me pause for a minute. Thank you again for being patient. I apologize for the, I didn't really sneeze, but I've been sneezing all morning. It's been pretty rough. All right, next up, this is an article here. It's from a Wells Fargo analyst. Sell before May and go away. Wells Fargo expects S&P 500 to drop to 3,700, which right now it's at 4,112. All righty. I'm just going to read through this. This is rather short, so I didn't make any notes on this. This was written by Senad Karametovich. All right. The S&P 500 is likely to shift direction in the coming days and likely correct 10% in the coming 3 to 6 months. Wells Fargo equity analysts told clients in today's note. The S&P 500 futures are trading modestly higher in pre-market Tuesday and within spitting distance of our 4,200 SPX target, says the analysts. Wells Fargo economists expect the U.S. to enter a recession in the second half of this year. Quote, we are maintaining our 2023 SPX price target of 4,200, but believe the risk reward over the next 6 months is skewed to the downside. Over the next 3 to 6 months, we expect to see a 10% correction with the SPX trading down to 3,700, the analyst added. They believe several factors will trigger the downside in equities, namely 1, aggressive monetary policy, 2, potential capital liquidity issues catalyzed by a bank crisis. Number 3, a consumer that is increasingly reliant upon credit to sustain spending. Quote, it is in this economic downturn, we believe the S&P 500 net margins will contract by a little over 100 basis points year over year after a tremendous post-pandemic run, end quote. Wells Fargo's lower view of 2023 expected SPX net margin 11.2 versus a prior 11.6 is reflected in the /2023 S&P 500 earnings per share estimate of $200 from the prior 210. For 2024, Wells Fargo expects S&P 500 to earn $213 per share. All right. So Mr. Genius Guy here at Wells Fargo seems to think that somewhere between now and the end of the year, we're going to end with the S&P around 4,200, which is just slightly higher than we're at. But we're going to have a 10% drop somewhere between now and December. So, but by the end of the year, it's going to go back up to where we're at right now. So, do I disagree with that? Not too much. I mean, my personal, guesstimation is that we're, probably going to have some sort of a major slide, especially with the yield curve that's been inverted for quite a while now. Just like it, was starting to invert back in 2019 at the end of the year when we had the repo markets were all just a mess. So, but in, 2020, I was telling all my clients at the time, going into 2020, hey, it's been a long time since we've had a major market downturn or, a bear market. We're well past due. I mean, we're probably into danger zone territory at this point. So, little did I know that there was going to be this whole COVID thing that was going to happen and give, an excuse for the Fed and our government to print money out of thin air. Just hand it out. And now we're seeing the consequences of that. Everything's more expensive because you increase the money supply by 40%. The only two things that I've seen that have really kept up as far as major assets, gold and silver, they're both very, very close. Actually, silver's up 40% since that time. So, or over that point. So anyways, all righty. Next up on the docket here comes from Zero Hedge. This article is titled "The Fed Models the Weather, Although It Can't Even Stress Test Treasuries." So this is kind of funny. So, all right, let me bring up my notes. All right. On January 10th, Federal Reserve Chairman Jerome Powell stated that the Fed will not be a climate policymaker, and that's in quotes. However, the Fed announced details of its pilot climate scenario risk analysis program, which involves 6 And when did they do that? On January 17th. So 7 days later, he changed his mind, which involves 6 of the largest U.S. banks analyzing their impact of climate change-related physical and transitional risks on specific assets in their portfolios. This pilot program aims to aims to deepen understanding of the climate risk management practices and to build capacity to identify, measure, monitor, and manage climate-related financial risks. The board will gather qualitative and quantitative information on governance and risk management practices, measurement methodologies, risk metrics, data challenges, and lessons learned. Yeah, because people who work for the government learn their lessons very well. We just keep repeating the same problems over and over again. Endless wars, endless spending, massive debt. And hey, when it all comes crashing down, I'll just sit here back here and go, ha, 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 ha. I told y'all. All right. Where was I? Lost my spot. Lessons learned. The vice chair for supervision, Michael S. Barr, said that, quote, the exercise we are launching today will advance the ability of supervisors and banks to analyze and manage emerging climate-related financial risks, end quote. Sounds like a lot of gobbledygook to me. However, an opinion piece in the Wall Street Journal by David Barker, a former economist at the Federal Reserve Bank of New York, questions the quality of the Fed's research on climate change. Barker criticizes the statistical techniques used in the Fed's studies on the effects of temperature on the U.S. and world economic growth and claims that the results were statistically insignificant. He suggests that the Fed's research is an example of climate propaganda and that its time would be better spent on improving its regulation of the banking system. Yeah. Barker argues that the Fed's research on climate change is an attempt to stress test the weather for political reasons. Yeah. I mean, anyone who tells you that, climate change is something we need to worry about is someone you really shouldn't listen to. These people are far too stupid. They shouldn't even really be voting. But hey, is what it is. I mean, the world's fine. I'd be more worried about global cooling. I mean, heading into a grand solar minimum that we're headed into, to me, being cold is a bigger worry than being hot. But, and all the greening in the Sahara that's happened over the last couple of decades, Anyways, the author concludes by suggesting that the Fed should focus on stress testing commercial real estate interest rates, accelerated quantitative tightening, and other neglected areas, rather than stressing the weather. While the Fed's pilot program is aimed at deepening understanding of climate risk management practices and building capacity to manage climate-related financial risks, Barker's opinion piece raises questions about the quality of the Fed's research on climate change and its priorities in terms of regulation. Insane. Boop. Yeah. Anytime you hear anyone talking about solar panels or all that BS, and they're not talking about nuclear power, they're full of crap. They're just trying to sell you something, or they're doing it for political reasons. And, it's a lot of, we could, if we had 300 to 400 nuclear reactors spread around the country, we could power America for basically nothing. Or next to nothing. You got to build the infrastructure, you got to build the plants, you got to get the material. But once it's there, it runs for an excessively long time without a need to replace the cores. My son, who runs a nuclear reactor on a submarine in the Navy, he could tell you all the good things about it. And he's even a leftist idiot himself. And he even agrees that nuclear power is certainly far cleaner and would provide power for everyone around the world. All righty. Well, that's everything I had to say and blabber about today. I hope I said something that was of value. If not, come back tomorrow. I might say something intelligent. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening. Watch some Astros baseball. They kicked the crap out of the Pirates last night. Like I said yesterday, nothing starts a win streak like a trip to Pittsburgh. So no offense to my friends from, anyone I know in Pittsburgh. It's a fine city. I've never been there, but, I'm not a big fan of their football team. The Steelers were a pain in the ass to the Oilers back when I was a little kid. And, but the Pirates haven't really been good since Jim Leland left the organization. That was 92 or 3, somewhere around there. But anyways, all right. Hope everyone has a great night. I'll talk to you next time. Have a good one. Bye-bye.